In 2024, Owando stock went from a price of 1110 naira to reach a high of 80 naira. That's almost 7 to 800% gain in the market. If you miss this stock as a member of our community, I showed you another opportunity that you would have taken advantage of. And I even posted it on Glofolio platform. You can see three turnaround stocks to buy if you missed Owando's 250% gain. Now, these three stocks have rallied. Some actually have more upside potential, but the thing is, they have actually appreciated far above my entry price. But there is one I want to talk about, and I'll tell you why that particular stock is surging. So let's look at the post. Now, this is it right here. I asked, did you miss the big run up on Owando at 9 to 10 naira? That was where I made a call on my platform. You can see right here, this was November 2023. I even called the stock again around 11, 12 naira or thereabout before the big surge. Now, for those that missed it, I mentioned three stocks that they should not miss in the market, and they were UACN, Unilever, and Wapco. UACN, Unilever, and Wapco, their prices have actually rallied high above my entry region. But the focus of this video is on Wapco. Now you can see right here, Wapco is a company that is aggressively cutting its loan obligation quarter on quarter. You know, if you look at Wapco stock has moved from a price of 20 something, 30 something to reach almost 70 naira. You can see right here. And a lot of people are asking me, can Wapco surge? Can Wapco surge? I will respond to that question shortly. But the truth is that we are actually on big profit in Wapco. I took advantage of Wapco at the lower end of the market. So here is the post. Let me even show you the date I posted it on Glofolio platform. So it doesn't look like we are just forming or trying to impress. We walk the talk and we talk the walk. So here is where I posted it. Yeah, this is it here. You can see August 8th, 2024. Three turnaround stocks to buy if you missed Owando. Then Owando had only done 250% gain. So I quickly mentioned these three stocks. That was in August 8th. You can see right here. And like I said, they were UACN, Unilever, and Wapco. Now, why did I mention Wapco? Why did I pick Wapco? Around August 8th. August 8th is still within this region here. You can see here, Wapco was selling for 36. You can see around 35, 34, 35, 36, within, even before the big run up. So you had an opportunity to buy Wapco if you were in our community. Now, why did I mention Wapco? Let's do a breakdown. I will do a technical analysis, fundamental analysis, and economic events that I think were actually responsible for the big spike on Wapco stock. Remember, Wapco had actually rallied first before the acquisition. So some of you might say, oh, it's because of the 80% acquisition and all that. I want to give you a breakdown. And this is how to spot good stocks early, which is what I do in our Glofolio community. Now, you can see here, Wapco is a company that is aggressively cutting its loan obligation quarterly year on year. This was the first thing I spotted on Wapco. That was the major point. So when Wapco released its results, it wasn't impressive, especially the Q2 results. It wasn't impressive. And if you look at it from the eye of an emotional trader, you would not even bother going close to the stock. Why? Because you saw that the company reported a lower number, that's net income or profit dipped, and then finance costs went up massively. But there was a sign that I'm going to show you right here. Now, in its Q2 results, 2024, Wapco incurred a whooping finance cost of 12 billion. So let me show you that results. So I want to open Wapco financial statements. Let's see that result on Wapco. And so we understand how trading is actually done and what's the best way to profit from the Nigerian stock market without gambling. So I want to show you Wapco. Okay, I think it's supposed to be Lafarge. I guess so. The name is confusing sometimes. Okay, yes. Sometimes I just look for Wapco, not knowing that it's actually Lafarge that is listed on the Nigerian stock market. So let's quickly see if we can launch the financial statements of Wapco. So before that, so here's the breakdown of my analysis. So I said in Q2 2024, Wapco incurred a whooping finance cost of 12.1 billion. That was what they incurred on their financial statement, 12.1 billion against 411 million paid in Q2 2023. That means, okay, so I want to show us the raw financial statements. Yes, Q2. Let's open Q2 and Q3. So I want to see the trend. Q2 and Q3. Yes, this is Q2 result of Wapco. So let's look at the financials. When you're analyzing financial statements, everything is not revenue, profit, and EPS. Revenue, profit, and EPS. No. If you follow it like that, you would most likely miss opportunities in the market. I do a detailed breakdown by looking at the note to account, looking at the core driver, revenue driver, line items. When you look at line items and note to account, that is where the main information is. It's not in this summary. Now, look at revenue. Revenue went up from 105 billion in Q3 2023 to 157 billion, almost 50%. Now, gross profits went from 56 to 81. Now, here's the point. Operating profits from 30 to 47. Now, look at this finance cost. In 2023, they paid 411 million naira, like I shared right here. You can see here, 411 million naira paid last year. And in 2024, they paid 12.1 billion. This was enough to scare anybody away. This is enough. You can see here from 30 to 47, and then finance income dipped from 3 to 2. So because of this, you see right here, so WAPO would have declared a larger profit in Q2, but it went up marginally from 32 to 37. Now imagine that they only paid for the 7. This would have been massive. But the company deliberately paid off a larger portion of its interest obligation. Now, when finance cost is growing, sometimes you see it as a negative trend. Don't just jump in to conclude like that. It doesn't work that way. Whenever you see a surge in finance cost on a company financial statement, before you conclude whether it's good or bad, go to the balance sheet. Always check the liability trend. If you see a surge in liability and a surge in finance cost, that is not good, meaning that the company is borrowing and they are incurring more cost. But when you see a surge in finance cost and a dip on non-current liability or loans and borrowing, that is positive. It means the company is deliberately paying off its interest obligation and it's positive. So let's go down to the liability section of the company financial statement. Now, look at loans here. You can see loans and borrowing. In the same quarter that finance cost surged from 411 to 12 billion, loans and borrowing crashed. Can you see here? From 24.9 down to 1.4. 24.9 down to 1.4. So you can see what I said here. I said the increase in finance costs may appear as a negative trend, but because you look at the balance sheet review that Lafarge has cleared a significant portion of its combined loan and borrowing of 26.1 billion down to just 1.4. That's 94% offset. 94% offset. So if the company continue to consolidate on revenue growth and EPS of these amounts, then we should see a bigger move in Q3 and Q4. You can see I had already projected the bigger move in Q3 and Q4 because of this trend. So let's look at what happened in Q3 after that finance cost was paid. So here is Q3 of Lafarge. Revenue went up again from 91.4 to 183. If you notice, Lafarge revenue has been going up by 50% on average, quarter on quarter, quarterly year on year, 50%. That means they've been benefiting from increasing price of cement. Now, number two, I'm looking at economic event now. Number two, remember, Lafarge is the only company in the industrial index that is yet to surge. Every other company in that index, like Dangote Cement, had done well. That's the beginning of this year before it pulled back. Julius Berger has done well before it pulled back. Chemical and allied products have done well. Then what is happening to Lafarge? Because Lafarge is in the same sector, this company. Now, why is Lafarge suffering? This is it, because of finance costs, because of rising debt. Number two, the economic event that was supporting Lafarge growth, again, was that the government has raised a lot of money from treasury bill and bond. So if government is raising a lot of money from treasury bill and bond as a result of increase in interest rate, if today government decide to issue treasury bill, you see that most of them are oversubscribed because the interest is attractive. So government have a lot of money that they have raised via issuance of bond and treasury bill. Question is, what exactly are they doing with the money? They are actually going to allocate a significant part of the money to capital projects. And capital project always drives industrial stocks. That's why we have likes of Dangote Cement, Lafarge Wapco, and Julius Berger, and they play in that sector. So government is allocating a lot of money. These guys are benefiting from trend in industrial sector, capital project, infrastructure development. But why is it not translating to increase in profit that will make the stock to surge? The company wants to settle its finance cost. Now, look at Q3 results right here. Look at finance cost again. Finance cost again. You can see in Q3, the company paid 12.3 billion. And what happened? In Q4, they only paid 3.6. The same finance cost that surged from 411 to 12 in Q2 showed a massive crash in Q3. Look at it here, from 411 to 12.1, the same finance cost dipped from 12.3 down to 3.8. You can see right here. This means the company is now reaping the fruit of a lower cost. And if you come down to the financial statement, you also see that, let's look at the liability section, which is the same borrowing right here. Look at the Lafarge borrowing, loans and borrowing from 24.9 billion down to 907. Can you see right here? 24.9 down to 907. Lafarge is clearing most of its loans and borrowing, which is already supporting the dip. So you would now see why there was a massive crash of finance costs from 12.3 to 3.6. Now look at what happened here. Profit went from 5.8, which is now where the surge is happening. You can see here. So that growth that would have seen in Q2 was actually absorbed, was actually paid because of finance costs. Now we are now seeing the real growth in Q3, which is profit before tax moving from 5.4 to over 47. From 5.4 to 47 billion. Can you see right here? And profit after tax printing at 3.3 from 3.8 to 30 billion. That's almost 10x, at least 8 to 9x growth in Lafarge. So the growth in revenue is now translating to massive increase in profit. So when you look at financial statement like this, you can easily tell. So it was easy for anybody to quickly sell off Lafarge in Q2 because of this increase in finance cost. But the dip on loans and borrowing will be invisible. In short, will be hidden because a lot of people are too quick to conclude that, oh, Lafarge is not impressive. And so when you're asking me, why is Lafarge surging? Why is Lafarge surging? This is it. So this particular play out in Q2 was enough for any smart person to absorb or mop up Lafarge right here. So it was easier for me to call Lafarge at this point. And I said, if the company continue to consolidate on revenue, profit, and then per share growth, we should see a bigger move in Q3, and we have seen it right now. Wapco stock is playing around multi-year key level, and a breakout could spur further rally to 48, which is 29% above current market. So Lafarge was even selling for 37 naira when I even made that call. And I even said, if it breaks out from this 40, key level, then it could spur to 48. And what happened? Lafarge broke out. You can see right here how the stock touched 48, which is the key level, and then went up again because of the massive increase in number. So in Q4, what are we expecting? We're expecting the same trend to play out, meaning that finance costs should be low because the company has write off a significant portion of loans and borrowing. And I guess it's actually a way of preparing the company for a sale to the new parent company that acquired almost 80% shares. So you can see that Lafarge actually prepared the company for a sale. So we didn't know. Maybe the condition was for them to write off a significant portion of loan and borrowing. The company was not ready to absorb a company that has an existing loan. So the condition was for them to cut down a major part of that loans and borrowing before they actually initiate that transfer. So you can see right now, Lafarge is actually trading at an all-time high that was last seen in 2016. That's almost from 2016 to 2024. That's almost like 8-year high. Lafarge is selling at 8-year high right now. So if the company continues to impress the market in Q4 results, we should see Lafarge surge to 96. naira, because I think the result, because if you look at the trend in revenue, it's been positive, it's growing back to back. Look at Q3 revenue so far. You can see right here, this is Q2, Q3. So look at 9 months results released. You can see 9 months results released so far show that the company has generated over 479 from 489. And this is largely driven by increase in price of cement. So if you come to note 3 to look at the revenue of Lafarge, what's the breakdown of that note 3? So let's see if we can find that right here. Okay, this is note 3. You can see a significant portion of that sales coming from cement. Can you see right here? Cement is actually contributing aggregate and concrete 3.4. So cement is actually a major driver. And the question is, what's the price of cement in the market today? Go and check. So you can see Lafarge is benefiting from increase in price of cement. That's one. Number two, Lafarge is also benefiting from um, a lot of contracts in the industrial sector because it plays in a sector where government is always pumping money in anytime they issue long-term bond, infrastructure bond, capital project. You see also this is where the money is going to industrial sector. So and these guys is actually looking to benefit more from it. So if the company declares impressive number in Q4, I think we might see massive rally again in 2026. But remember, price is already far above my entry price. This is not a buy recommendation. I only share this to tell you why Lafarge stock surged higher and why it's important for you to always get in early on every stock before they are mentioned on the media. I always say it many times. Once your stock finds itself on mainstream media, once a stock is on mainstream media, then it's no longer a buy. The mistake a lot of you make in the market is that you like to buy a stock the moment it's mentioned. When you see it on Nairametrics, you see it on Business Day, you see it on Punch. Mainstream media doesn't talk about stocks that is still down. Mainstream media does not tell you what to buy. Mainstream media only talks about stock that had rallied. The reason why they made it to mainstream media is because they rallied. If they didn't do well, you wouldn't see it on mainstream media. So the least place to be looking up to whenever you want to buy a stock is mainstream media. So I hope this video on why Lafarge stocks is clear enough and will help you understand how to get in early on a stock. The best time to buy a stock is when it's still down. And this is what we share in our Glofolio community. I share stock picks back to back with members of my community. You can see the recent ones that we shared. Like I think I posted one 2 days ago or yesterday. Yes, this is it here. You can see December 12th, and today is 14th. I just posted one December 12th and I posted one December 11th. These are the recent stock pick that I shared. You can see 10, 11, 12 right here. So in December so far, we've dropped 3 stocks. You can see 10, 11, 12. And these stocks are stocks that are emerging from the bottom. We have a lot of stocks that have shared so far, and you can't just but buy into it because I am detailed in my recommendation. I'll even show you another stock that I mentioned recently. That is NEM. NEM. I remember I recommended NEM, and if you watch my video on how to make it in Nigerian stock markets, I also talked about NEM stock. You can see right here, this is NEM Insurance. So I recommended NEM at, you can see entry region was around 8.4 or lower. You can see right here. And where is NEM selling at right now? If you come here to check for the price of NEM in the market, you can see NEM Insurance is selling for almost 10 after touching almost 11.3. You can see right here, this month so far, NEM is already up by 28%. Simple. So the question is, how can I buy at the bottom of the market? The answer is simple. Join a community where they show you stocks that are selling at the bottom of the market, stocks that are benefiting from events, and stocks that are about to pick up. This is what I share in my portfolio community. This is the first time you're watching my YouTube channel. Kindly hit the subscription button and turn on the notification bell. And if you have a question on how to join our community, you can drop a comment right here. I will respond to you. And if you have a question, you have a contribution on Wapco stocks, you can as well drop it in the comment section. I'll be right there waiting for you. Thank you.